How are you today? Please give me some okay that you can hear me and you can see my screen. Actually, I'm already showing. Guys, oh, okay, yeah, here we go. I see the chat now. All right, thank you very much, guys. So let's begin. Thursday, closer to the weekend. The FOMC finished yesterday without any real changes or booms. So far, everything as planned originally, and we are looking for some setups on some pairs. There are several updates that we want to go through, and the first one is the Aussie dollar. Now this pair was bullish for us. We got our move, the first move, the initial move that we were looking for. Then we got this bearish divergence, and the idea was very simple: drop down and buys. Okay, now look what happens. The drop down came. We got a triple cycle on the 1 hour chart, and it was kind of a even special cycle here. Everything you name it could be correct. The idea was very simple: two waves down, we are after buys. But here are the two waves down. Now we need to validate them. Now look what happens. We have one move here, which is already almost on 61.8. There is divergence developing here, which is irrelevant because we don't have two candles in play. We put an X on it, right? Plus, if we drop this level, the cycle that is expanding is already crossing through 161.8. 1 plus 1 normally equals 2. Aussie dollar at this stage gives us a warning sign and becomes at this stage at best neutral, because the market is telling us clearly the idea was bullish according to the weekly and the daily cycles, right? We got a false break. Now it was aggressive because we never got any daily trend line yet and any daily higher highs. So our trading was only for the short term since the beginning. But the idea was still getting two waves correction, 1, 2, right? Or at least kind of a range. Now this is still doable because it can still do something like that, or turn to be into kind of a range here. That all is still in the plan. But for buys that we wanted, currently we don't have the confirmations. And this is the importance of reading the market correctly. Well, reading the chart correctly. And for every single step, ask yourself the question: do I have the okay to buy? Now the 4 hour is a bullish hidden divergence, but does the 1 hour confirms that? The answer is no. As we just saw, there is no level on the two waves. There is no divergence on valid one on the two waves. Therefore, there is no buy. And if the Aussie dollar will go through the 61.8, ignoring it, well, it could still make something like that and false break, right, with divergence, and then it becomes valid. But if it goes through and hold below, game is over for the bullish plan, and it will be neutral, waiting for the next signs. Okay, and once again, the idea is first step. Validating the idea is the second step. At this stage, we do not have any good validations for buys. Therefore, the Aussie dollar is, as for now, moving to neutral. Very simple. And once again, you heard me many times saying that actually when you start your trade, always remember when you can go for short term, when can you go for long term, right? Now, Let me ask you this question. How many of you, for example, at that stage said, oh my God, now I'm going to catch some 500 pips movement. It's a beautiful cycle on daily. Now I'm going to make a huge move, right? It's very easy to fall into this trap. But in order to get a big move, the higher time frames have to be lined up. And a daily chart did not create any higher highs, did not create any trendline breakouts, anything like that, right? So before the daily gives us that understanding, we can't expect nothing for the long term. Make sense? And the only trading here was the short term, based on the level of 61.8 of this cycle, based on 2 false breaks. And it is still good to possibly look for these buys, but we just now need to wait for the confirmation. Since we don't have them on the lower time frame, basically we have nothing to do. You see that, guys? And what do we do in that case? The very common thing traders do is, okay, so let's babysit it, let's watch it. And that's wrong, because if there is nothing developing now, there will be nothing on the next several hours. So instead of babysitting that and still trying to catch the bottom, let it go, because nothing will happen. Okay, you don't want to waste your time and your focus and effort on pairs that don't require that and are not ready for you yet. Okay, makes sense, guys? So this is the first pair. Now the ones that we have related to the OZ. We were after the OZ Kiwi sell, which is going beautifully for us. Again, short term, because all we wanted is the 61.8 and the 100. 61.8 was reached yesterday. 61.8 of this, right? Was reached yesterday, but as we said, as long as it holds this one candle and doesn't break upside, it's bearish. So the next destination for that scenario is the 100% expansion, meaning the zone of 108.80 approximately. That could still go lower, and maybe if it cleans that area, it can go also to 107.60, the 161.8, right? As for now, there are no signs against daily possibly developing a bullish hidden divergence. And I say possibly because 4 hour must fit in, and yet 4 hour does not. Therefore, the pressure is still bearish. Okay, after the partial cash outs yesterday, that could be the next destination to watch. And if it's cleaned, the next one is 107.60. All right, pound OZ, we were long, and here you go, 61.8 reached. This is the place to make some money. The next possible level for us is the area of the 100, and this is 178 zone. As for now, yes, it's developing the divergence, but let's take a look here. The lower time frame, no false breaks, nowhere. No 2 candles yet broken, nowhere. So every drop is yet a buy. The pair is still bullish. Okay, now how easy it is to find something like that on the 1 hour chart and say, oh, okay, I'm going to sell without even making lower lows. It's a mistake. And that's what I always try to tell you guys. 1 hour chart is irrelevant before the 4 hour and a daily are ready for sales. 4 hour only now, crossing above 176.20, reached the area of 61.8 expansion. Only now. Now we can start looking for setups. And now we don't have any, right? We simply don't have any. So remember that always. Lower time frames, as tempting as they are, They are irrelevant before higher time frames agree with their direction. So if 1 hour gives you the idea to sell, 4 hour and daily must be there as well. And the last divergence from the daily, as you know because we spoke about it, was bullish after this pressure. And it doesn't make sense to go against it just yet. Okay, it's too easy to fall into this trap. Plus, remember, that's a double cycle, meaning 38.2 is definitely a target. What will happen since? We will have to wait and see. Okay, so for all those of you who are long from 2 days ago with this breakout that we have had, right? That was our bullish setup. That's your place to make some money. If you already did, wonderful. That's your place to cash out fully once you get the signs against you. False break with divergence is a good sign. Okay, place to make the money. And remember, it still has the room slowly towards this area. That's where the meeting point comes. Okay. All right. So the Aussie versus the Kiwi. Now this pair has no bullish divergence yet triggered on the weekly chart. That's why we are after sells here mainly. It still has the room for the lower part of the range here, right? So no divergence completed on the weekly chart between the two lows yet. Daily has no divergence by itself on the last part yet. And 4 hour must be two waves or a bearish hidden divergence, basically bearish, right? In order to give us a sell. 4 hour gave us two waves. To confirm the 4 hour two waves, we had to get two waves by its own on the 1 hour chart. We got it on the 1 hour chart. That was the first, and that was the second. Now I want to show here the important thing of the two candles. Look what happens at that point, guys. This is where the divergence is in play. Let me just increase the MACD so you can see that. This is where the divergence comes. Okay, now we know that in that case, what we must have, two candles rule between the highs. No two candles on the go, right? Right here, until this very moment. All this ride with before the divergence, nothing happens. Here, you got the two candles roll. No worries, Tuxman. No worries. Miss is never a loss. Miss means there is always another chance, right? So here we go. So here we got the, once again, it looks so tiny, but you can see that the high here is higher. Two candles cleaned, divergence comes relevant. But even if the two candles not in play, what I want to show you is how do you trail with the MACD. If two candles not validated, you trail your candles all the way until the two candles become in play. So even if that would happen here, and there is no divergence between these two highs, you put a V on that because you have a high no two candles and it's trailing until the first time you get the two waves, right? That sometimes happens because MACD is lagging. Sometimes it's later than the chart. Okay, and sometimes it's much earlier than the chart is ready to react. And these situations, that's where the importance of the two waves come in. So each of the cycles, 1 hour and 4 hour, came in play, and we got ourselves finally the setup we wanted. Now, my view personally in such situations, that even though the trend line is enough to be, this is the last trend line, enough to be broken, I always prefer the break of the official low. So that's all. That's the pair. It's going, and it has a room because, as we saw, weekly divergence not confirmed, daily divergence is not there on the last part. So yes, there was this divergence, but this is the weekly cycle, right? Not the daily. And on a weekly, we saw there is no divergence confirmed. So the retrace here should be in two waves, which we got, or a range, which we didn't have, or a bearish hidden divergence, which also we didn't have, but two waves is enough for us. And we got the sell. So for us, the plan was and remains sell the rallies. Does that make sense to cash out partials? The answer is, once the divergence here comes valid, it's time to at least move stop loss to break even. And all the idea of cashing out partial or not derives from the total performance. How well your performance go in your week, in your day, in your months. Okay, so that's for the OZ. Now another OZ that is on our list, the euro versus the OZ. Our plan, two waves on the 4-hour chart and sell. The second wave that we expected turned to be much bigger than expected. And that's a beautiful proof of never marry your idea. Trade facts, not wishes. Right? The wish was the waves break out and sell. The fact is, it is extended much more. Now, the plan, according to the weekly cycle, was and remains still bearish at this point as long as the top holds. But the daily is not there yet. We have a level to pay attention to. That's the 61.8. If it blocks and a divergence come in play. As for now, it's not. The 4-hour is building two waves with extreme, which is fine. Right? But again, it has to make a stop here. The 1 hour, not yet even close, because we have the rally. We never got any two candles rule applied here. Therefore, the euro OZ on the short term is still bullish. Every drop is still buy. Okay, so that's about the euro OZ. For longer term, as long as the weekly holds, the idea is to sell. But in order to be able to sell the weekly, daily and 4-hour must to fit in. And as for now, they are not. Okay, so that's for the OZ. OZ franc approaching to a good level that we have right here, the weekly bottom of this weird range. The daily has the big cycle for us. Now we have few which we can put on. This is the 161.8, and this is the duplication. And that's the place to start and pay attention to. Now, again, as for now, no divergence in play on the weekly. It's a potential, never yet ticked to the upside. So the long term is still not in play. Daily, right here, okay, had this divergence but without weekly, it means short-term pullbacks. And the 4-hour chart, again, we require two waves or a bearish hidden divergence, correct? And in that case, we got a bearish hidden divergence. Now, personally, is that tradable? From my point of view, my answer is not, because we don't have here nowhere on the rally clear two waves with clear range. So even though that drops, from my point of view, this sell is not tradable. Technically, it's not correct to trade, because, well, and this time it worked. Most of the other times, it will make this move and go one more rally and fail. So it doesn't work to deal with anything like that. 4-hour is a bearish hidden divergence. 1 hour is not two wave corrections in none of the ways with confirmed divergence. Therefore, the sell is not tradable from my point of view. We do approach good level zone, as we saw before. It's right here, surrounding the 070, the psychological 070. And I think it's worth to pay attention to this level. I believe the block would be exactly there somewhere. Here, 071 down to 070. No rush here, because the divergence must confirm. With a false break, with a turnaround, right? Currently, we don't have any of this. So the short term is still bearish pressure. But that's for the short term. Okay, next ones. Euro dollar. Once again, the plan is pretty much like the Aussie dollar. That was the special cycle that we were dealing with. Divergence is in play. We require corrective cycle. Corrective cycle could be two waves. Corrective cycle could be range. Which of these it will be, we don't know, but the idea here is we are in corrective cycle. And the best place to look for the retrace would be, of course, here. If it's a range, it can dance around 23.6, no problem. But generally, this is the best place to get it. Once we get the drop downs, we start looking for bullish divergence, bullish setup, false breaks, higher highs, trendline breakouts, all the possible combos in play. Okay, so that was the plan. It's so far following the plan. Pound dollar also joins the same idea. After it created the 4-hour higher highs, this becomes to be special cycle, two waves or a range, and we can start looking for the second leg of the 4-hour chart correction. But remember the case of the Aussie. We do not trade based on a wish. We are waiting for a fact. At this stage, there are no facts for these pairs. Okay, so remember that. Very, very important. All right, next ones. Pound yen and the euro yen. So pound yen is now in a bearish hidden divergence, which is finally good. 1-hour chart, sorry, also has the cycles for us, so we can start looking for the sells. The way I love to do in such situations is lower lows. The last relevant lower low would be here. Once we go below, sell the rallies would become a plan. Okay, now why this is not a low here and that place? Because I don't trust this divergence. There are no two highs we can compare in that situation. Therefore, it's not really reliable from my point of view. The one that we can call a high is right here, but we don't have two candles rule in play. Therefore, I wouldn't rely on anything of that. So for me, it needs to go below this area and then sell a rally would become a plan. As long as it is not there, what easily could happen is this. Two waves to clear this area and make a sell back to the trend line. Trend line and 38.2 of the double cycle. That would be the best place to deal with sells. Okay, so once again, the idea is in play. Wait for facts. We don't have false breaks. We don't have lower lows. We don't have nothing. So sell 1 hour chart, or even worse, 15-minute charts means nothing. The chances are completely against you. You could become lucky and catch a move, but for long run, you don't want to rely on luck. One time lucky, 9 times crying. Remember that. That's what happens. And then traders don't understand what do they do wrong, because it worked once. Why it doesn't work again? Lower time frames are irrelevant, completely irrelevant before the higher are incomplete. Now 4 hours starts to show the readiness for that to happen, but we don't have yet any lower lows in play to start looking to sell the rally. Okay, get it? So that's the case. With the pound yen, it can still take some time. Euro yen, the short-term longs, basically, I think now it's smart idea to start making cash outs. It's basically getting over. It's right on the 161.8 of this cycle. Special cycle in play, right? Quick reminder, special cycle means first and last leg are equal pretty much. The second one is double X or triple X. Okay. Now we have the signs against divergence in play, false break, which was right here, one false break with a divergence, potentially second false break. This is at least partial cash outs. Is that enough for sells? To answer that, we need to go to the higher time frame. Daily last divergence is bullish. 4 hour has to be 2 waves correction, and 4 hour is still 1 wave. So most likely we're gonna see some pullbacks here just to experience second leg before any other further continuation. Okay, now dollar yen, after reaching our targets on the 110, making the bounce. This is the 110. It bounced right from there, making a triple cycle on the 4 hour chart with daily and 4 hour chart divergence in play. So we are now in a correction. 2 waves are required. This is the first, this is the second as it's building. The correction should take us towards this zone right here, and from there we will have to stop and see. 1 hour as for now has no 2 candles rule with divergence in play. There is no divergence here, so the only part we can as for now look is this, and that has to be a cycle by itself, meaning it has to take us towards 161.8 or even slightly higher. Therefore, dollar yen correction is still bullish as well. Okay, on the short term. What will be on the longer run, we don't know. But the 110 reached, cleaned, game over. Now we are looking for the next signs. Okay, so in other words, dollar yen currently is neutral or bullish on the short term. For long term, again, we will have to stop and see what happens, because the weekly last divergence is bearish hidden, but on the daily divergence is bullish. So we don't have any agreement between these time frames. It doesn't make sense to consider nothing for the longer term, right? So dollar yen, irrelevant. Now I want to explain one question I got about that's cat franc. Is the move down over? To be able to answer that, always ask yourself the question. The last divergence on daily is bearish. No bullish sign since. Therefore, the 4 hour chart bullish divergence, right, cannot be considered as a reversal for the longer run. As simple as that. As simple as that. So the only way to deal with longs here is short term, more like for a scalp. Once the 4 hour becomes a divergence, once the 1 hour becomes a divergence, and once the lower time frame becomes a divergence, which it's not, then and only then you can go for scalping buys. But for longer run, the last divergence on a daily is still bearish. Therefore, it doesn't make any sense to buy yet. Okay, just wanted to explain that because there was several questions I got about this pair. Is that good for buy? And it's important to answer this question by asking ourselves the same questions, right? Challenging ourselves with the same things. What do I have from the longer time frame? And the longer time frame, the last pressure, still bearish. Okay, so that's from the forex side. Any other pairs, guys, you have on the list? Because we don't really have most of them moving. The best one, sorry, there was one more, Euro CAD, which we said yesterday. We are still after the buys. We got here another bullish hidden divergence in play. Some ugly moves right now because the first pushes are very beautiful. So for all those of you who are involved with the Euro CAD in longs, now we start to see 1 hour chart divergence against, 4 hour chart potential divergence against. I would get out of any of the longs and see probably for next week, because now it's Thursday, until it will form anything with daily and 4 hour chart combo. It will not happen this week most likely, and see later what will come. Are we for sales for longer term again? Is it going to make a deeper correction? Something like that. It's early to judge, but I think it's great place and time to cash out the short-term longs. Same exactly with the Kiwi Cat. It was 2 waves correction, divergence in play. I think game over. Is that enough to go for sales? We will need to stop and see how the daily and 4 hour chart combos behave. The divergence is in play. 2 candles rule still holding, still not broken. So we need to see next week what it brings to us. But on the short-term buys, at this stage, it's more than enough. Okay. All right. So gold. Gold is bullish for the short term as long as this low holds. So that's our 161.8 level. Our expectation is something like that. We need to drop lower and make sure the 4 hour chart is in agreement. Currently, 4 hour chart is bearish hidden divergence, meaning 1 hour chart must be corrective cycle. So gold is expected to do something like that first of all, and then we will see. So short term, it's probably low to the downside. Once we have this 2 waves correction, bullish divergence come in play, it becomes good short-term buys again. Okay. Oil. Now oil also, for the short term, our plan is basically with the momentum. It's also making higher highs now, so drops for buy is likely here. Can that make the move down? First of all, the answer is of course yes. It's building up here a triple ascending cycle, trying to give us some kind of formation like that. So after the corrective cycle, 2 waves or a range, we can start looking for buy setups. Again, don't just buy because it looks good and possible and blah blah blah. Too easy to find a reason, right? Don't find a reason, find the fact. Fact is bullish signs from 3 different time frames. 3 different time frames. You have it, you have your odds. You don't have it, most likely it will be an early entry, unless you fall in the lucky part. Okay, indices. So we're stuck on all the Americans. The German DAX, we need a second wave, right? So we need something like that before we sell. Again, it didn't happen yet, so there is nothing to update about it at this stage. And that's basically all. Anything else from your list you want to cover, guys? Ahmed, the euro dollar was covered, so please watch the recording. Okay, but the idea is the same exactly like we have on the last several days. We reached the first rally, we want the correction now, and after that looking for the buys. But pretty much like the gold, which you just saw. Okay, anything else from your list, guys, that you are looking to trade and you want my comment? Just quick note, guys, remember, it's very important. After the previous 2 weeks, it's very logical and reasonable. The market will go back to tricky moves. Don't fall into that part. Remember, it's not about trading more. It's about waiting for the right setup. Even if that means you don't trade 1 day or 2 days. But the time you have the setups correct, that's your time. That's your chances. If you try before that, that can be painful. That can be costly. Remember that. It's very easy. You know, after 1 good week or 2 good weeks of movement, it's like saying, "Oh my God, now it's exciting. It's moving." But that's exactly the place when there is too much excitement. That's exactly the place where the market normally blocks it and starts to make opposite signs. And that's why I always remind, when you have 3 time frames in agreement, it could be any kind of combination, 15 minutes with 1 hour and 4 hour for scalping, or 1 hour, 4 hour and daily for shorter medium term trading, and for swing trading 4 hour daily and weekly. Whatever is your style, just make sure, go with that. Okay? All right, so no questions. Happy weekend to all. Quick update. Next week, it's the last week of summer, so I will be part of it off with my family. We're making some family time. So not every day I'll be here for the live room. I'll send a schedule. On Monday, I will be there for the weekly plan, the full weekly plan. Okay. And that's all. September begins soon, so summer is over, guys. I hope you had some good vacations, you had some good times, some good summer, some good sun time. It's time to get ready for the fall. Thank you for your time. Happy weekend to all. Tomorrow is the weekly summary of all the principles with Jordan. Make sure to watch that, at least the recording. It's very good cover of the whole week. So thank you for now, guys. I'll see you in the Telegram groups later. Bye.